Stock of the day though, thought we'd have a look at DYL. The uranium developer says it has received binding commitments to raise $220 million in a placement to move its flagship Tumas project in Namibia towards production. The company says it has significant interest in the placement at $1.22 a share, with a range of high quality domestic and international funds added to the register. Company also plans to raise an additional $30 million through a share purchase plan. Henry Jennings, is this a good move from DYL? You've been a bit of a bull on uranium for a while.
I have, Koshi, but the tide has turned a little bit on uranium. We did see some numbers out of Cameco recently, and that did suggest that pressure to buy in the spot market had been alleviated a little bit. We do get Kazatomprom numbers coming out as well pretty soon, and it's going to be interesting to see how the sulfuric acid position is for Kazatomprom. They use sulfuric acid for in situ leaching to actually get the uranium out the ground. Now, coming on to deep yellow, well, it's in deep red today, and the rest of the sector's in deep doo-doo, I have to say. And we have seen a bit of a sell-off throughout. I guess, you know, for me, they always say this is a well-supported issue. It's kind of standard operating procedure to say that. I just wonder why, when they got to $1.55, $1.65, I mean, they knew they needed the funding for this project. Why weren't they raising the money then when the world would have been falling over themselves to give them money? And now here we are with what is going to weigh on the stock for some time. The problem is it's 250 million bucks, which is a relatively large chunk of money, I have to say. And not only is it 250 million bucks, but it is kind of in three tranches. The placement is in a tranche of 140 million and then another 80 million. So, and then there's an SPP of 30 million. So just when you've taken the placement, the first one for 140 million, and sort of your head gets above water, you're going to have to stump up again for the next 80. And then if you're a retail shareholder, there's going to be pressure on it again because the $30 million share placement, the SPP rather. So this is going to take a while to work through the company, to be honest. I have to say it's probably killed the share price in this one till at least May, I would say. So here we are in March. So I wouldn't imagine, unless something dramatic happens in the uranium price, we're going to see an awful lot of appreciation here. In fact, I would suggest that we are going to see this one head lower over time because there's just indigestion. And when the stock and the sector gets unsexy, which it does appear to be at the moment, then we do see that indigestion weighing. And I think, you know, the underwriters, the guys there would be praying and hoping that the uranium price perks up, because $1.22.5 is not a very easy line in the sand to defend. I wouldn't be surprised if this one back down to $1.10, which should probably be good buying there. But indigestion city for deep yellow. Okay,
so if you're in it and you've had the run up, it's pulled back a little bit from $1.50. Is this as good as it's going to get for quite a while? Do you take your money and run, or do you stick there patiently and ride it through?
Well, I guess if you're in it already and you're a retail shareholder, the joy is that you can take your money and run. Not that there's much money in it at the moment because it's just above the SPP price. And then you can go hell for leather in the SPP if it does run again. So, right. You know, you've got that optionality with the SPP. But I would suggest, you know, a lot of these placements, a lot of these SPPs, especially when the market's weak, it's hard to keep them above the price. And once they slip below, what happens is those fast money hands, those hedge funds that take them hoping to flip it quickly, they tend to throw in the towel equally as quickly and move on to the next one. So I wouldn't be surprised to see this one back down to $1.10. They were there, you know, I was picking these up at 90 odd cents before Christmas and sold them at $1.55 at the end of January. I recently added it back in, stupidly as it turns out, because they've gone down since. But I am still sitting on some profits in this one. But yeah, I think we could see back down towards $1.10 in this. So certainly wouldn't be rushing in here.
Okay, all right, Mathan.
Yeah, look, uranium is still the only commodity that's standing out of the pack on a 12-month basis. Everyone else is basically crunched. Gold is probably at the top end of that and is breaking out, and that's probably the place to be at the moment. But I think uranium is okay. The Cameco result did take the steam out of the ship. It's pretty much going sideways a bit. And I have to agree with Henry on what the management has done. You know, I always find it funny how everyone thinks corporates doing takeovers and capital raisings, they've got great timing. They're the worst timers in the market. They're worse than brokers, and brokers are bad. So in that context, yeah, why didn't they raise when it was flying and the commodity was in favor? Yeah, easy to say afterwards, I suppose. But we all knew they were going to raise. But it's one of those things when it's a commodity mining stock about to build a project, you don't want to be there when they're building it. You come to it when they're about to go to production, or you are there before they find the commodity. So it's a bad cycle for...
So they've found the commodity. They haven't started the mine yet.
Now they're raising money. You knew they had to raise money.
Could be a while away.
It could be, and you have to trust management to execute.
Yeah.
This is why we've been in, you know, we were in Boss before, and then we moved to Paladin because we wanted to be in the producer, in the fantasy portfolio. And I still think that's where you want to be to benefit from the current prices. So I would still prefer to be in Paladin. If you like the uranium exposure, you want to be there, I would say take the money and move to Paladin and wait to see how this all plays out. And then after that, you might want to come back. I mean, as a retail investor, you can move around. You know, you don't have to be stuck to it. I agree with Henry. I think in the short term, this is going to have a struggle. It's going to go through a lot of raisings, a lot of things have to go under the bridge. So I think it'll be tricky for in the short term. So I wouldn't be there.
All right, and maybe switch into Paladin.